Blackstone Group-backed Aadhar Housing Finance Company is coming up with its IPO. Let's discuss. The IPO opens for subscription today and closes on 10th May. It has fixed the upper price band of 315 rupees per share and lower price band of 300 rupees per share. For retail investor, minimum lot size would be 47 shares, translating to a minimum investment of 14,805. The company plans to raise about 3,000 crore from the public, out of which almost 2,000 crore is offered for sale and remaining 1,000 crore will be fresh issue. The company plans to utilize the net proceeds from the fresh issue to meet future capital and for general corporate purposes. Now, coming to the business model, Aadhar Housing Finance offers a range of mortgage loan products for residential and commercial property purchase and construction, home improvement and extension. It operates primarily in the low-income housing segment of India, focusing on individuals with low to middle income who require smaller mortgage loans. Now, because of this, the average ticket size of the company loan is around 10 lakhs as of December 2023. The company operates across 20 states and union territories, and it has an extensive network of 487 branches. Now, coming to the market it operates in. The Indian housing finance market has shown a strong CAGR of 13% from fiscal year 18 to fiscal year 23, and projections suggest that this positive trend will continue with a CAGR of 13 to 15% between fiscal year 23 and fiscal year 26. However, within this landscape, the growth in the low-income housing segment has been relatively subdued, seeing a modest CAGR of 3% from fiscal year 18 to fiscal year 23. Nevertheless, CRISIL anticipates a shift in this trajectory, forecasting a growth rate with a CAGR of 8 to 10% between fiscal year 23 and fiscal year 26. Now, the demographic profile of India is poised to favor the housing industry, driven by factors such as urban population increase, a rise in the number of nuclear families, and also growing demand for independent houses. Furthermore, the government's focus on housing initiatives, coupled with incentives provided by certain state governments, like reducing stamp duties, are also expected to boost housing demand going forward. Now, coming to the company's financials. Over the last 3 years, Aadhar's asset under management grew by 14% annually. Moreover, in the first 9 months of fiscal year 24 alone, AUM rose by 20% compared to the same period in the previous fiscal year. Now, the company's net interest income has also shown growth, achieving a strong CAGR of 28% from fiscal year 21 to fiscal year 23. In fiscal year 23 specifically, it experienced an increase of 28.6% to reach 1,244 crore rupees. Moreover, in the 9 months ending fiscal year 24, this figure rose by 29.7%. Now, Aadhar's profitability has also shown improvement, with the profit after tax growing at a CAGR of 27% over the last 3 years. Furthermore, in the first 9 months of fiscal year 24, the company posted a return on assets of 4.2% and a return on equity of 18.4%, both showing healthy growth over the years. Now, Aadhar has been able to maintain good asset quality below 2%, but the low-income group borrower segment does add some risk to the overall portfolio. Also, the company's total outstanding borrowing has grown at a CAGR of 8.2% to 12,153 crore rupees in fiscal year 23, and this has further jumped to 13,000 crore in the first 9 months of fiscal year 24. The company lists these 4 players as its peers, and amongst its listed peers, the company stands out as the largest player in terms of revenue. At the upper end of the price band, which is 315 per share, Aadhar is valued at 23.5 times its earnings in fiscal year 23, which is relatively lower than its peers. Now, coming to the most important part of the video, which are strengths and weaknesses. Now, Aadhar Housing Finance is well positioned in a high growth segment, benefiting from trends such as India's demographic profile, rising disposable income, higher underpenetration of organized lending in low-income housing, and also government initiative support. Now, these factors will collectively contribute to the growing demand for housing in India. Now, with a presence in 20 states and union territory, Aadhar has effectively spread its risk, ensuring that no single region contributes more than 15% to its assets under management. Now, this diversification minimizes the company's vulnerability to localized issues. Now, Aadhar also boasts a strong financial metrics, including robust loan growth and profitability. It also maintains a low non-performing asset ratio. Coming to the weaknesses, despite potential, the low-income housing finance sector has seen modest growth around 3% annually during fiscal year 18 to 23, compared to the broader housing finance sector's 14% growth over the same period. Now, the company faces inherent risk to the creditworthiness of its low-income customer base, which could lead to an increase in the non-performing assets. Now, Aadhar Housing Finance is also vulnerable to interest rate volatility, which could impact its borrowing costs and profitability. Aadhar also relies heavily on borrowing, which can expose the company to further risk. Having said that, this is me, Merlin Sana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com